trades is moving at the speed of the internet, but trade financing is still actually moving at the speed that the people can actually move.
So when you're a small supplier in Asia waiting for payment, you end up basically with this trade financing gap. What if the goods aren't shipped? What if the supplier doesn't get paid because the buyer defaults?
And a lot of the business logic that was baked into the previous model that is in a paperwork form can now be digitized.
It's battle tested with actual users and liquidity, especially for stablecoins.
That regulatory piece really helps to have a stablecoin like XUSD, which is designed to be compliant with regulatory frameworks. So to then say to them, here we have this solution that gives you 24/7 instantaneous settlement.
I think trade finance could become the next major wave of real-world use cases on the blockchain itself. I think that's truly going to be a game changer. Hi everyone, welcome to the season 2 of the StraitsX podcast, Stable Money at Scale. In the last episode, we talked about how stablecoins are becoming everyday payment money. But today, we are going deeper into something even bigger, global trade. Every food we buy, from electronics to chemicals, or every product that we use actually moves through the global supply chain itself. But the financial infrastructure supporting the chain and the trade itself is still incredibly fragmented. Today, I'm very happy to have Martina, Directors of Strategy at Unloq, which is one of our key partners, and also Jong, BD at BNB Chain, which has been a very popular smart contract. I'm very happy to have you guys here today.
Thanks, Tianwei. Very excited to be here.
Thanks for inviting.
So cool. Let me just set the stage for today's discussion, which I think will be quite exciting as well. As I mentioned earlier on, like 2.5 trillion of the global trade is still having a gap from most of the report that we are seeing in terms of financing. There is a lot of problems that everyday suppliers are still dealing with. Given that Unloq's unique experience from helping SME out of China and Hong Kong itself, I would like to hear your take, some of the pain point that your suppliers are seeing today that you guys have been working for the last few years to try to help them solve.
Yeah, so I think the fundamental problem with supply chain finance today is that we basically do have trillions of dollars in trade, and a lot of it still runs on physical paper, manual checks, and then these slow settlement rails that could work a little bit better. So when you're a small supplier in Asia waiting for payment and you're relying on these physical shipping and trade documents being couriered, sent to a traditional bank for manual review and approval, you end up basically with this trade financing gap. So basically, to explain a little bit more about what supply chain finance is for anyone who's unfamiliar, think of a buyer who might be a t-shirt seller in the US, a supplier who's this t-shirt factory in Asia. Typically, the payment terms might be like the buyer pays 30, 60, 90 days after shipment or after acceptance of goods. In the meantime, the supplier still does need working capital. They need to keep the lights on in the factory, pay their workers, continue to source materials, and so on. They could get a loan from the bank, but that's pretty expensive. So what they do is they come to the bank, say, hey, we have this deal with this buyer. Could you give us financing based on the understanding that the buyer will repay you later on? And because the buyer may have a higher quality because they're a larger company, the supplier gets a better rate. As I mentioned, the pain points are it's heavily manual. There are physical papers involved. So think shipping documents like a bill of lading, invoices, and so on. And those take a lot of time to process. A second pain point is basically on the bank side, the operations can also take time. So they have high compliance and regulatory requirements, whether that's KYC processes, anti-money laundering, fraud screening. And then on top of that, you're dealing with different legal jurisdictions or business documents or processes that are standard in one market, just don't happen in another. And so all of that basically just adds up.
Yeah, thanks for sharing that. Actually, here at StraitsX itself, we have quite a bit of we are a payment player. We've had a bit of footprint in Indonesia itself, where we've been heavily involved in the early days for crowdfunding campaign and SME financing as well. So I think the situation described is very close to heart to many of us as well over here, that even though today trades is moving at the speed of the internet, but trade financing is still actually moving at the speed that the people can actually move. And the sad thing is most of it is still done very manually today. And actually, even that, the paperwork that involve humans involve usually lawyers, and they can be pretty expensive. If you actually calculate it from a percentage basis of how much the paperwork actually costs, makes it very inefficient for actually being able to do this thing from a small ticket size. I think the pain that we've been seeing, at least from my experience, from our Indonesia side of the business, is that a lot of this financing are finding huge problem when actually the ticket size is small. Typically, most of the banks will only want to serve clients that at least want to borrow, a trade size of $1 million or more, because like it's a short-term financing, only like 30, 60 days. The interest rate can be high, can be low, but if you actually calculate 10%, that's less than $10,000. It might not be enough to pay for the lawyers involved if it's actually a too small a ticket amount, right? So that's something that definitely is on top of the mind for a lot of the financing. So it's not that they're unwilling to, it's just that it's economically unsustainable. But I think this is where it's really interesting. I'm very proud that, together with Unloq and BNB Chain, StraitsX and all of us come together to did what we call the first tokenized receivable financing deal on the Unloq SE Plus platform that was done in February itself. Maybe this is where I would love you to give insights on how they actually work and how it actually transact step by step itself on the blockchain.
Mm-hmm. Yeah, we were really excited to see a real smart contract-based trade financing deal and to be able to settle that in XUSD. So let me just quickly walk through the transaction. Basically, what happened was we had a supplier called Chemtank, a commodities player. They have an existing relationship with their buyer, and so they just kept conducting trade as usual. They have years of trade history, and nothing really changed on that front. Chemtank then submitted all of the required documents to Unloq, Unloq through SE Plus, verified the documents with AI, and that just speeds up, what would have been that manual process that you were just talking about. Chemtank then agreed on the financing terms, interest rate, payments, and so on. Unloq then sent Chemtank financing in XUSD. Previously that would have been done in fiat, but stablecoin, that moves faster. We're not worrying about bank cut-off times, and they still have certainty about the amount they receive, US dollar, XUSD, pretty much the same in terms of value. And then the final step for us was we recorded the trade documents and this invoice data in an auditable format on chain. So, everyone involved, buyer, supplier, funder, has visibility over the documents for the underlying trade. But we're still obviously very conscious of privacy. We're limiting access to who can see this information, but the key parties that need this information are able to access it quickly and easily.
No, awesome. Thank you for sharing that. We're very proud to be involved in one of the first real-world trade financing deal that's settled in stablecoin itself. But I think for the viewers out there, I would love to actually hear you actually explain it in a comparison mode, actually, how this workflow is different between the traditional workflow that actually, the old way that, invoice financing has been done versus what now is actually in the smart contract based one.
Yeah. So in the traditional world, you're kind of seeing these invoices from the underlying trade. It goes through bank approval, financing, and then settlement. In some ways, we've actually not really changed that. We do want this process to feel familiar to our buyers, suppliers, funders, and so on. We're not trying to reinvent the wheel, basically. The new workflow is invoice, Unloq validates it with AI. We record this as a trade asset on chain and a contract is generated. That kind of happens in the background. So that's not something that the buyer, supplier, funder need to worry about unless they're interested. Then the financing happens and they get instant funding instead of, again, waiting for those bank settlement times.
So what actually changed for the funder in this model? Like why would a capital provider prefer this over traditional receivable financing? And how has it become faster, better, or cheaper in this new setup?
Yeah, so for the funder specifically, as you said, faster, better, cheaper. The faster part is obviously because we're validating with AI, a lot of the processing times are faster, and that's obviously attractive to the supplier, the buyer, basically everyone involved, rather than waiting for this whole process. And for the funder in particular, the visibility into this underlying transaction is really important for them. Obviously, there's digitalization, which is happening separately of all of what we're talking about, but this kind of just speeds it up. So, we're not only digitizing these records, we're putting them on chain. The funders can basically audit and get real-time visibility into these transactions.
Yeah, I think you just touch on that a bit more because, I'm heavily involved in this project as well. I think the interesting part here is the capability of a blockchain being Turing complete, and a lot of the business logic that was baked into the previous model that is in a paperwork form can now be digitized. Like when would the fund actually be dispersed and at what condition is being dispersed, right? That is pre-programmed in a smart contract that promised the receiving address in predefined receiving address. As long as this condition is mapped out, XUSD that's escrowed in a smart contract will be dispersed to the receiving address itself. I think just because of this component, we have seen that, it replaced two parts, right? First, the usual manual intervention that, bankers have to approve, plus them being the custody of this process in order to, help to make sure that business logic is adhered to. This is now translated to a smart contract that's on the blockchain. And another part of this thing here is the settlement pieces is now digital because it, again, can be done fully completed on chain via XUSD transfer. So the financer will receive the payments on the due date itself automatically, right? And I think as an engineer that really got us really excited about this kind of solution is what I was talking about earlier on. Because of this two factors, the cost that used to be like the lawyer's fees in the hundreds of dollars, banks who are actually being the guardians of this process usually charge the transaction fee as well. Everything moving to the blockchain now that can be set at a fraction of a few cents, which I'll get John to talk about how the infrastructure work on a gas fee basis. But then this itself reduced the cost so much that it makes smaller ticket size transaction a lot more viable now. You no longer have a higher entry point that you had to do $1 million financing to do so, because at a fraction of a few cents in terms of transaction fee, I think finances and invoices as less than $10,000 can be done too. And more importantly, because these are on the smart contract basis, they're also fungible. It means to say that we can accumulate a lot of this kind of contract as a purchase that's being made by one financer. I think those are the part that I find really exciting, that we're definitely moving to the right direction where invoices become digital assets and financing become programmable itself. With that, we'll love to bring in John to talk about how BNB Smart Chain has actually enabled this to work and why blockchain works well for this kind of transaction itself. John, back to you.
Yeah, sure. As you guys discussed, I think it's quite logical that blockchain tech is suitable for enterprise use cases. But also, I think there's only a handful of public blockchains that's very active and liquid, which is suited for the institutional and enterprise use case. And BNB Chain is probably one of them. It's battle tested with actual users and liquidity, especially for stablecoins. We just crossed 18 billion circulating supply for stablecoins, and BNB Chain captures about roughly 40% of global stablecoin transaction share. And also, we were seeing a lot of institutional adoptions. And one thing that institutions typically look at is if there's been previous cases. So BNB Chain, along with a few others, is leading home for institutional tokenized assets. So institutional footprint has grown from literally 0 to 3.8 billion in RWA assets on chain in 1 year-ish, and putting right behind Ethereum. So these assets include BlackRock, Spidol, Franklin Templeton's Benji Securitize, Vanek, or Zelco's USYC. Yeah, and I guess it's just easier for a company CFO to sign off when there's already such enterprise cases.
Is there anything that surprised you about how the real world finance is actually moving on chain?
I'm not too surprised that it's moving on chain. I used to work at European bank before and left there to join crypto 5 years ago. And I recently saw the news that the same bank is issuing their own stablecoin. So I'm not surprised. But what I'm surprised is how fast it's moving on chain since last year. I think payment is one big sector that's growing aggressively. StraitsX powers many popular cards like RedPay, and I think their volume kind of validates the demand here. Cross-border payments, remittance volume is real, especially for B2B payments. And surely everyone, including Tianwei, is kind of working on opening the corridors where demands are. And Unloq, working on supply chain, financing on chain. I'm learning the gap and how it can be the next real use case. So
yeah, you definitely touch on what I think here StraitsX is a core part of our mission, right? It's basically stablecoin rails for real world payments. We focus a lot on the utility side of this thing. And I think, like you mentioned on the card side, it's a very good use cases that we see, rocket growth over the last 12 months itself. But it's an example of what we've been hearing over here, that blockchain isn't just for crypto trading. It's fast becoming the infrastructure for global commerce as well, right? And this Unloq place, or the supply chain transaction that we see on daily basis by a lot of merchants that is using this to just do cross-border trades. But that actually brings us back to what I want to talk more about again, how stablecoin is actually a centerpiece for a lot of this thing to work. In our opinions, stablecoin is the digital money that's natively on the blockchain. That is, especially a regulated stablecoin like XUSD and XSGD itself, is a mirror of the money supply that we actually see in the traditional Web2 world itself. This is the piece that we feel is a fundamental building block to have a stable currency that's pegged to a currency that everyone uses. In this case, dollars is the world dominant global trade currency that enable a lot of the financial services that we want to tokenize to come onto chain. But we'd love to hear what you guys think about how stablecoin itself is affecting a lot of this adoption that you're seeing from trade financing itself.
I think exactly as you said, that regulatory piece really helps to have a stablecoin like XUSD, which is designed to be compliant with regulatory frameworks. That really helps with giving us, our funders, our clients a lot of comfort in moving to settling with stablecoin. Because again, we're working with a lot of clients in traditional industries. You're talking like some very Web2 manufacturers who kind of aren't really familiar with crypto, or the last time they heard about it, maybe it was like the NFT craze or something, like the crazy Wild West of crypto ages. And I think that's still a lot of the impression. So to then say to them, here we have this solution that gives you 24/7 instantaneous settlement. You don't have to worry about weekends, bank holidays if you need your money fast. And it's regulated by the central banks or these other regulators. That really gives them a lot of comfort in being able to use stablecoin and receive those benefits.
What about you, John?
Yeah, I guess stablecoins like instant settlement 24/7 and also easy access for unbanked. But I really like how Martina touched the compliance. It's just like 2-3 years ago, I feel like compliance was definitely a constraint, but it doesn't feel like constraint, but it's actually like unlocked for institutions, like along with privacy. So, and StraitsX probably is the gold standard for stablecoin oversight in Asia. So
thank you for that. No, I think that's what we've been seeing in the ground itself, at least from our point of view. Given the regulated environment like a jurisdiction like Singapore itself, a tier 1 jurisdiction in terms of regulation and a beacon in terms of leadership for this space in Asia Pacific, having a regulated stablecoin itself allow institutional adoption, which I think is the next wave of adoption that's coming to the blockchain space itself. Because if we see this, there's multiple cycles that we've been living through. In the initial days, it's more wow land, like what Martina was talking about, where a lot of this is driven by hype and a lot of P2P transaction or speculative related stuff. But stablecoin have turned trade finance from a banking process right now into a programmable complete workflow. Because with the Turing complete of the blockchain, and now you have a digital money that's native on the blockchain itself, end-to-end transaction and behavior can be governed fully by a stablecoin itself. And with that kind of use cases, institutions are definitely interested. But then the underlying assets that they're dealing with, being a regulated stablecoin out of Singapore, has been one of the key differences that we have seen, at least from our partners, in terms of willingness to adopt this kind of experimental approach itself. So with that, I want to change this thing a bit back to about how this actually solve capital efficiency and liquidity across supply chain. This is the part I think that's close to the heart of a lot of merchants that have been in this trade itself. It's all about whether if the capital can be a lot more efficient and can they actually move this thing at the speed that they expected it to be. Martina is the expert in this space itself. We'd love to hear your guys' take about this, because I think you guys have been in SME financing for the last 10 years.
Yeah, definitely. It's been a while. For us, for Unloq, SC Plus, and this smart contract-based solution, the really exciting thing is it actually puts trade finance arrangements back in the hands of the buyers and sellers, as opposed to a traditional trade instrument like a letter of credit, which is done on the bank's terms. And so I think we picked up on this smart contract point a few times, and let me explain. So a letter of credit, it's pretty commonly used by banks. The typical issue is the buyer and supplier trying to avoid risks. What if the goods aren't shipped? What if the supplier doesn't get paid because the buyer defaults? There's political instability, there are currency issues, the list goes on. And so what the letter of credit does, it's a bank-issued document that guarantees the supplier a payment, provided that specific shipping and documentation terms are met. And this is obviously good because it serves that purpose of kind of bridging those risks and bringing comfort to the buyer and supplier. But the letters of credit are very much done on the bank's terms. Now, what we can do with smart contracts, stablecoin, and so on is we can let them set the details of this is what we want with our trade conditions, and therefore this is how we're going to settle. You can set custom milestones. So not just pay at the end or do this bank facilitated escrow, which, as we've mentioned, kind of can have very high legal fees, other bank fees, and so on. But they can program them in just through smart contracts that are basically automatically triggered. The payment gets made when these conditions are met. I mean, this is not to say banks are bad and we're cutting them out. We're actually working pretty closely with several. They can still come in as funders. And, this actually, for us, we think they can really benefit from the transparency that smart contract world brings, as well as the flexibility, because for, say, some buyers or suppliers who just didn't want to pay those fees or maybe didn't necessarily agree with all of the terms of the letters of credit or didn't qualify for one reason or another, we're now opening up that universe for the funders as well as for the buyers and suppliers.
No, definitely. I think this is the part that, initially got me really excited about blockchain itself, is that I think that, Bitcoin was the genesis of everything. The key, as an engineer, the key thing that I think is solved for me is that it created the ability to have decentralized trust, right? Without trust is inherently very expensive, because you think about how the world works is that institutions like the banks have a lot of payout capital, tens of years of long history of being around and being able to be the safeguarded institution that people trust in, right? They base their trust on that. And for the bank then to lend that trust to a supplier in order to complete a transaction, I think given the manual processes and the reputation risk that they're taking on, I think it makes sense that there will be costs involved in this. And that's how the supply chain has been working for the last 50 to 100 years itself. I think the game changer here when Bitcoin first came out is the ability to have decentralized trust, right? Programmably, mathematically proven that you do not have to trust one party. Consensus can be achieved by a group of individual or clusters of individuals that actually witnesses the transaction itself. But I think then it's moved a further step along when Ethereum came out, and now with BNB and others smart contract native blockchain itself, is that now this trust can be fractionalized, it can be programmable. I think this helps to make this whole complete change in the process that we are dealing with on a day-to-day basis, that a lot of things that in the past will require a centralized trust entity to do can now be done at a fraction of the cost directly on a Turing-complete smart contract basis on like the BNB smart chain itself. I think that's how this technology has underlyingly been a revolution for a lot of the suppliers, because they can reduce their costs, increase their liquidities, and the differences between high-speed growth and survival actually in some sense really depend on these two factors itself. And I think this is where the future is looking at. And we'd love to hear you guys, again, where do you guys think this is now moving towards, which is what's going to happen next, right? We have got this thing working. It is one of the world first, and I think we have a lot of plans for how to roll this out at scale. But we'd love to hear it directly from two of you who are major industry practitioners on this. What do you think is going to happen next?
I think three things for me: kind of entry or increased usage by a couple of industries, for us, new products, and then also among that, something we call multi-tier supply chain financing. So on the first one, the industries, we've mentioned before, the ticket sizes that are involved and how inefficient that is. So I think two industries that can really benefit are e-commerce and commodities. E-commerce, transaction sizes are getting smaller. Trade volumes have increased significantly, but just the value of each trade has reduced. And that whole process is indeed really tedious for banks to handle if you're dealing with paperwork, manual reviews, and so on. The time involved, the legal costs involved, all of that. So with smart contracts and AI, obviously, we can facilitate trades, whether they're big, small, whatever it is, whatever actually works in the world, rather than trying to make these transactions fit some kind of financing criteria. The second industry I think that really benefits is commodities, where the risk is high, trust is maybe a bit lower in some cases than other industries. There's more risks of non-payment by one party. Sometimes that just might be due to a sudden change in price of the underlying goods. And you can see with smart contracts that enforceability becomes easier and more transparent if you set the conditions up front, and there are these automatic triggers. As a funder on the commodity side, you might be worried about the risks of dealing with goods coming from a sanctioned country. So having the auditability of having all of these documents on chain and being able to verify those and see those gives you a bit more comfort in terms of, okay, actually this deal might pass my screen criteria. The second overall topic is basically just in terms of on-chain trade assets. I think we can really be more flexible in terms of, as I've touched on, smart escrow. What are these different conditions, these suppliers and buyers can be more creative now with whatever milestones they're seeing, or if they just want a certain number of days delay, or even if it's just let's kind of keep our existing escrow arrangements, let's do it at a lower cost. And then for us, there's also multi-tier supply chain financing. So this is a product we already do quite a lot of in mainland China, and SC Plus just helps us bring it to the cross-border world. What it is let's take a tier 1 supplier, the t-shirt manufacturer selling to a department store in the US. The tier 2 supplier might be the factory mills that sell to the t-shirt manufacturer. And then tier 3 might be a dye manufacturer that sells to a fabric mill. And because we can record and trace this entire series of transactions on chain, and because we're doing this without the slow manual process of here is each set of documents that a bank or someone else has to review at each step, we can give financing to that tier 3 dye manufacturer based on the credit quality of the department store much more quickly, because that's who's ultimately paying. And so that also just really improves access to working capital for these multi-tier suppliers down the chain.
Oh, that's really exciting. I think you just mentioned one part that I thought that this itself had a lot of potential, especially on the multi-tier financing part of it, because I think as it go down the ladder in terms of the chain, the tier 3 guys are the one that's actually facing the most problem because their ticket size are the smallest, and their reputation and maybe revenue and P&L are not the brightest, right? So those are the guys that really need the financing, because if you really look at the how the scale of things works, actually most of the tier 1 guys are pretty well served because they have like transaction in the hundreds of millions of dollars, and they have like huge strong banking relationship. It's usually their downlines that is 2 or 3 tiers away from them that actually needed financing the most, and then actually being paid have the highest cost and the most risk involved. But if there's ability for like a tokenized payables from the tier 1 supplier to be able to pass to the tier 2 and tier 3 and so on, everyone will benefit on to be able to so-called get financing on this receivable of the tier 1 guy at the same terms as the tier 1 folks as well. I think that's truly going to be a game changer. But love your take on this, John.
I think especially with stablecoin, direction seems a bit more clear. Growth in cross-border payments, remittance flow seems logical next step for crypto industry as whole. I think just right at this moment, B2B cross-border payments involves very hybrid rails involving stable coins and large FX banks or OTC desks. So probably this is efficient at this current landscape and on-chain liquidity for non-USD stablecoins, but likely industry will try to push to move more on-chain. And yeah, I just come across many builders that are already building infra, whether RFQ or AMM based, to solve this issue efficiently. It's certainly happening, but I think like it will be much more interesting when like institutions actually like move big part of their treasuries on chain. It does become more efficient, like a whole cycle.
No, I 100% agree. I think we have seen the rise of stablecoin over the last few years, and I think everyone could probably agree that the killer use cases for stablecoin, at least on chain in the first phase, is definitely cross-border payments itself, where the speed and the settlement time, the delay between sort of interbank transaction itself is a key pain point that has been solved. But I think we are really just at the first inning here. I think trade finance could become the next major wave of real-world use cases on the blockchain itself, because now that the foundation of having a native currency that is stable, as regulated, that's on the native blockchain itself, you have the basic building block for then the programmable part of the blockchain to really shine. Because given the concept right now, we talk about smart contract and how a lot of this kind of trade financing stuff usually are a paper contract. Once that can be digitized, a lot of this process should move onto chain as well, especially when having a regulated basis being supported by local government like the MES will allow larger institutional to be willing to actually try out this kind of new product. And that's what we are seeing in the market itself. So, to summarize, I think stablecoin started in the crypto market itself, right? But we now see that at least regulated stablecoin right now is actually entering real world trade use cases. And with smart contract and connecting to documentation, financing, and settlement, these things are what the futures is probably already working towards, or we're already there right now. So I'm very happy to have both of you join the conversation today. But we'd love to hear more about what is the next big exciting thing that's coming on from Unloq and BNB Chain respectively. Any tips and upside about upcoming news?
I guess like after all, BNB Chain's like community-driven, decentralized, and permissionless blockchain. So it is an ecosystem. So like perfect place for experimenting innovations. So I'd say like look out for ecosystem adoptions for sectors like AI, payment, and RWA. And a lot of these sectors are also merging a bit and also very fastly growing. So it will be just interesting to see how much adoption we get in next few years.
How about you, Martina?
For us, it's basically just keep building out these new products that we've been talking about, the smart escrow, smart contract-based solutions, new products, building those multi-tier solutions in. And we're just very excited to bring this solution and products to a wider range of clients out there.
We're coming to the end of this, but I actually have a good thought here that maybe we should end with something fun. Actually, you guys are in the space with us for quite a while, and I shared this before in my previous podcast that we are in the payment space for almost 10 years now, and maybe in the blockchain and stablecoin space for about 5 years. But it still cracks me up sometimes when people talk to me about what exactly is a stablecoin, when is XSGD or XUSD going to the moon, when it would triple in price. So those kind of things that still surprise me these days, even though we've been doing quite a bit of education about what exactly is a stablecoin. But we'd love to hear some funny things that still crack you guys up, on your day-to-day life that you hear about, working in your industry. Anything, Martina? Maybe you first.
I'm trying to think. I think there's just a lot of education, like you were saying. There's just a lot of education. What is a stablecoin? Is this an NFT? What is a wallet? So there's a lot of basics. They're good. Honestly, they are good questions.
So does your family or your friends know what actually are you doing in your current job today?
Kind of.
I still struggled with that for quite a long time after many years. I don't know how you do. Not everyone understands exactly what is blockchain, and it takes a long time to really try to explain to them. And sometimes I just give up. How about you, John? Anything funny? Given that you are on the deep run on that, you're literally working on a blockchain project itself.
I think it's a lot better now. I think 5 years ago, like my parents didn't get it at all. So, but it has actually like, I'm surprised like how, because like I think institutional adoption has definitely helped people around me understanding more of what we do. Yeah.
So are you saying that now your parents know what you do?
Yeah, I'm at least like they're they don't think I'm like in trouble or something. Yeah.
Okay. You're slightly. You're probably a lot more advanced than I am. I still struggle to tell my mom exactly what do I do. Yeah. In university, I was a computer scientist. They used to think that I fix computer for a living, but these days, I think just give up when over dinner they would just say that I do something on the computer. But I think we do a lot more than that. So with that, thanks everyone for tuning into the Stable Money at Scale. If stablecoin are transforming payment, tokenized trade finance might transform global commerce itself. We're very happy here today to have Martina from Unloq and Jong from BNB Smart Chain. Thank you for having here, and thank you for spending time here with us today.
Great. Thanks so much, Tianwei. Great conversation.
Thank you.